on Sunrise. Coming up this morning, Chief Executive Officer of Dalex Finance advises government to return to international capital markets only for infrastructure and critical growth amid Fitch upgrade.
We're a developing country. We're a country in a hurry. We're a country with a huge infrastructure gap. If we borrow and we spend the money on the right things, it cannot be wrong.
And also, Ghanaian economic confidence surges as recovery takes hold.
I think the key learnings here is not only as Old Mutual but as an industry, we still have a lot of work to do in terms of financial education side.
Plus, Ghana's economy surges by 7.7% in February as industrial action and activity rebounds.
Reflecting improved business activity, stronger production levels, and growing confidence across key sectors of the economy.
I am Christabel Success Trevor. Bring you details of our headlines and other stories shortly. Stay with us. The chief executive of Dalex Finance says Ghana should return to the international capital markets, but only if the funds raised are channeled into critical infrastructure that delivers measurable economic returns. Joe Jackson's comments follow Fitch Ratings' decision to upgrade Ghana's long-term foreign currency credit rating from B- to B, with a positive outlook.
I've always indicated that we have to return to the capital market. We don't have a choice. Borrowing in itself is not bad. It's what you apply the proceeds of the borrowing to that can make it bad or ineffective or worse, destroy our economy. But we're a developing country. We're a country in a hurry. We're a country with a huge infrastructure gap. If we borrow and we spend the money on the right things, it cannot be wrong. So if we've done the right thing, if we are being recognized for doing the right thing, then it is time for us to go back and maybe take funds from the market to bridge that huge infrastructure gap we have.
You just heard their Chief Executive Officer of Dalex Finance, Joe Jackson. Confidence in Ghana's economy has more than doubled in a single year, according to a major new financial wellness study, with nearly half of working Ghanaians now saying they feel confident about the country's economic direction, up from just 1 in 5 a year ago. This report has the details.
The Old Mutual Financial Wellness Monitor, which surveyed 656 working Ghanaians in October 2025, found that 48% expressed confidence in the economy, compared to just 22% in 2024. Respondents cited better governance, a more stable economic environment, and falling prices as the key drivers. The mood shift is being felt in people's daily lives. Financial stress has halved from 60 to 30%, the lowest level recorded since the study began. Incomes are rising, with more than a third saying they are earning more than a year ago, and 2/3 reporting they have less debt than 12 months ago.
People are definitely starting to see a recovery trend across the board in their financial outlook. They're more positive, they're cutting back on expenses, they're saving more, and they really are making traction on their progress in terms of recovering from the previous year's impact. What is also still true is that people are still financially vulnerable, especially when it comes to financial shocks. So unexpected expenses, medical bills, things like that do still impact people quite greatly.
But the report carries a stark warning. Despite the optimism, 3/4 of working Ghanaians lack confidence in their retirement savings, a figure that has worsened over 3 years. Only 1 in 3 has actively started saving for retirement, and more than half could run out of money within 3 months of losing their income. Old Mutual Ghana Group CEO Roy Ponongwe, commenting on the report, underscored the role of financial literacy amongst the public.
I think the key learnings here is not only as Old Mutual but as an industry, we still have a lot of work to do in terms of financial education side. I think it is a journey that we need to still travel. We need to invest in terms of time and resources, in terms of educating the public, because you have a lot of people who are making financial decisions without all that information.
The report concludes that while Ghana's recovery is real, it remains fragile, and that without long-term financial planning and greater trust in formal financial institutions, the current optimism risks masking a much deeper vulnerability.
Ghana's economic recovery is gathering significant momentum. Fresh data from the Ghana Statistical Service shows that the economy expanded by 7.7% in February 2026. This surge was driven by strong performance in the industry and services sector.
The monthly indicator of economic growth, MEG index, rose to 111.3, up from 103.3 in February 2025. Government statistician Dr. Alhassan Idrisu says the numbers reflect rising confidence and improved market performance.
This is a strong improvement from the 3.9% growth recorded in February 2025. What this tells us is that economic activity strengthened considerably in February 2026, reflecting improved business activity, stronger production levels, and growing confidence across key sectors of the economy.
The MEG report identifies industry as a standout performer, growing by 9.6%, a massive leap from the 2.8% recorded a year ago. The services sector followed with a robust 7.4% expansion, driven by gains in ICT and finance. The agriculture sector saw a slowdown, growing by 3.8% compared to over 9% in the previous year.
These February results provide an important early indication that Ghana's economy is maintaining positive momentum in the first quarter of 2026.
More comprehensive data, including the March 2026 MEG and full first quarter GDP estimate, are expected to be released on June 10.
Away from that, Chief Executive Officer of the National Petroleum Authority, NPA, Godwin Edudzi Tameklo, has announced that the 24-hour operations in the petroleum downstream will be rolled out in phases. He said it will begin with selected facilities across 4 regions of Ghana, namely Greater Accra, Ashanti, Western and Northern regions.
Speaking during the launch of the pilot program in Accra, the NPA boss noted the pilot is expected to cover over 200 fuel stations across 4 regions.
We intend to roll it out in 268 stations, 8 petroleum depots, 2 refineries. It's our confidence that together with all the stakeholders, we'll make the fueling of the economy not one that is limited only to the mornings, to the afternoons, but it will be a day and night operation.
Edudzi Tameklo further stated that this phased approach will enable the authority to test systems, refine operational modules, and ensure that the transition is efficient, safe, and sustainable.
Is that we are trying so much to get the various jetties to also work 24 hours, to ensure that discharge of petroleum products into the country will happen seamlessly. Currently, at 5 p.m., the Tema jetty goes off, and we think that we are losing a lot of productive man-hours. We want to take this 24-hour into that sector as well.
Central to this effort, he said, will be the deployment of modern technology for real-time monitoring and the introduction of structured workforce.
Let's do some more stories because government has set an ambitious target to achieve 70% 5G population coverage by Ghana's 70th independence anniversary in March 2027. Communications Minister Samuel Nati George says the rollout will follow a competitive spectrum allocation process designed to expand connectivity while protecting investment in the telecom sector.
The sector minister says the rollout forms part of broader reforms in spectrum management and digital infrastructure development. Speaking at the 15th anniversary launch of the Ghana Chamber of Telecommunications in Accra, Sam George, revealed spectrum allocations will be carried out through a competitive bidding process.
The NCA is following due process to ensure there is fairness to all the affected licensees. But our target is unambiguous. We want to have 70% population coverage of 5G by Ghana's 70th Independence Day celebrations in March 2027.
Chief Executive of the Ghana Chamber of Telecommunications, Sylvia Owusu-Ankoma, says the increasing number of fiber cuts across the country is putting significant pressure on telecom operators.
Just around 400 cuts. We're experiencing over 8,000 cuts per annum when it comes to fiber cuts, which is increasingly a strain on our operators' resources.
Some industry players pledged their commitment to regulatory compliance within the telco space.
Well, that was a report on government targeting 70% 5G population coverage ahead of the 70th Ghana's independence anniversary. We'll now take a look at how the cedi is faring against major trading currencies and how some of key commodities are also faring on the global market.
On the interbank foreign exchange market, the dollar is selling at 11 cedis 34 pesos. It's gained 4 pesos. The British pound is selling at 15 cedis 34 pesos. It's gained 6 pesos. The euro is selling at 13 cedis 28 pesos. It also gained 2 pesos. However, be guided that these figures could be higher at the Forex Bureau now. On the global commodities market, Brent crude is trading at $105.87 per barrel. Gold is trading at $4,689.18 per ounce, down by $25.95. Cocoa is trading at $4,393 per ton, down by $194.
Well, that'll be all for the business news on Sunrise. For more business stories, please check out our website, 3news.com. I am Christabel Success Treve. Sunrise continues with the rest of the team. Don't go away.